Hi everyone, I am Ben Robitaille. Welcome back to the channel where today we're talking about the step-by-step guide to buying your home in Canada, especially if you're a first-time home buyer. Now, buying a house is one of the most significant financial decisions anybody is going to make in their lives. Whether you're a first-time home buyer or experienced investor, purchasing a home requires a lot of steps, and it helps to be prepared every step of the way. Really quick, before we dive into it, if you like this video, hit the thumbs up button. And if you really like this video, we'd love to have you subscribe to our channel. We put out information every single week on the Canadian real estate market and tips and tricks to make your next real estate move a smooth and easy process. All right, so step number 1, determine your budget and financing options. So this is the first major step towards making a purchase of a home in Canada. What you'll want to do is speak to a mortgage broker. Now, banks are an option too. The reason I would suggest using a mortgage broker over a bank is a mortgage broker is going to shop around at all the major banks to get you the best product to buy a house, whereas a bank is only going to sell you what they have within their institution. Now, your mortgage broker is going to take into account a number of factors. How much money do you have saved for a down payment? How much debt do you have? Do you have regular monthly payments to other obligations that you have to make? These are all factors that are going to affect how much you can get approved for when it comes time to buy a house. It also helps if your mortgage broker works hand in hand with your agent when it comes time to make the purchase, because they'll be able to communicate back and forth on specific properties and whether or not you will qualify or have a good chance of qualifying for that specific house. The other thing you will have to do with your finances is, aside from your down payment, you're going to need a portion of that available as a deposit when you actually make the purchase. So let's say you and I were to go out today and make an offer on a house, and the sellers accept that offer. Within 24 hours, we have to submit a deposit. Now, the deposit counts towards your down payment, but needs to be given, like I said, right away. Now, the amount of deposit varies from market to market. As a generalization, I would say anywhere from 3 to 5% of the purchase price is a strong deposit. This is one of those items where the larger the amount is that you put forward, the more skin you have in the game as a buyer, and the more deliberate and serious a seller is going to take that offer. Now that we have all our finances figured out, it's time to move on to step number 2. Choose your location and property type. Now, when I say choose your location, this can be very vague or very specific. I've worked with buyers who wanted to be on a specific street in a specific neighborhood. So anything that came up on that street, we took a look at. Whereas I've worked with buyers who said, I want to be within 1 hour of this one location, which gives you a really big catchment area. Now, depending on whether or not you're in a city or more of a rural setting, you're going to want to think about your property type as well. If you're in a city, are you looking at condos? Are you looking at freehold properties? Now, condos will have an associated fee every month to deal with items such as maintenance, insurance, building amenities. Whereas freehold properties, you're responsible for everything: the building upkeep, lawn care, snow removal, everything that comes along with owning a house. If you're in a rural setting, are you looking for a house that's on a well and a septic system? Are you looking for something with municipal services? Do you have propane heating your house or natural gas? And if you don't know what any of these things are, that's okay. Talk to your real estate agent and they will be able to help fill in those knowledge gaps so that you can make an informed decision before you even step foot into the house. So this brings us really nicely into step number 3, which is work with a real estate agent. I've sometimes worked with buyers where they've been in a revolving door of contacting listing agents on realtor.ca and just going to see properties with whatever agent was listing that specific house. And I've even heard some buyers say that, a listing agent can get me a better deal, which is absolutely not the case. Real estate in Canada is set up in such a way that it levels the playing field, so long as realtors are abiding by the code of ethics. As a buyer, if you pick one real estate agent that you like, know, and trust, it becomes very easy to set up appointments. They can send you listing alerts, so anything that matches your criteria will hit your inbox, and then all you have to do is reach out to the agent and say, hey, this property looks great, we want to see it, when can we go book a showing with you? And then that agent's going to take you through. They're going to know your situation. They're going to be able to represent you in the best light to the sellers and get you into the dream home or your first home or the next home that you want to be in. Moving on to step number 4. Now, at this point in the buying process, we have an accepted offer, but it's conditional because we want to do our due diligence. During the pandemic, when the housing market was crazy and every house was getting multiple offers, there weren't a lot of conditions, but we're at a point right now, let's hope we stay there for a while, where buyers can go in with conditions. The two big ones are financing and home inspection. Now, a financing condition allows you to go back to your mortgage broker with the agreement of purchase and sale and say, hey, is the bank going to actually give me the money I need to buy this house? This condition protects you because on the off chance that the pre-approval you got doesn't match up with this house, if the bank says no, you can pull out of the deal and not have to worry about coming up with the amount of money you offered on closing day. In fact, I think it's a good condition to have for sellers too, because you know that the person buying your property is gonna have enough money to close on closing day because they've checked with their bank. They've had the opportunity to go say, this is the house, will you give me the money for it? And the bank says yes or no. But either way, we're informed and we know. The other condition that a lot of people speak about is a condition of a home inspection. Now, this allows a licensed home inspector to go into the home and conduct a visual inspection of the properties. So they're not tearing drywall out to see if there's anything growing in behind the walls, but they will go up in the attic, the crawl space, the basement. They will detect to see how much moisture is there, what a normal level of moisture is, and provide you a detailed report on what kind of shape the house is in. Now, based off this report, if there's anything detrimental or something that will need to be repaired right away that's not a cost that you're able to take on as a buyer, you can say, you know what, we don't want this house anymore, we'd like to pull out of the deal. You can. This condition lets you do that. But if the inspection report comes back clean, maybe it's just got a few minor nicks and scratches, then you can proceed with the transaction, knowing with a little bit of peace of mind that the house you're about to buy is in good shape. Now that we've done our due diligence, we can move on to step 5, which is closing the deal. Now, a lot of the heavy lifting with closing a deal comes on the end of the lawyers. Prior to closing the house, the lawyers are going to have what they call an adjustment sheet, where they're going to give a specific amount of money to the seller in addition if they've paid the property tax for the whole year, so they get some of that money back. Same thing with gas and water and any kind of utility bills up until the day of closing. What this does is it keeps it fair so that the seller pays everything up until closing day and the buyer pays everything from there on forward. The lawyer's also going to work with your lending institutions to make sure the finances from your bank or mortgage broker is sent over to the seller's side on closing day. Now, with closing, there are a few costs and fees to be aware of. Typically in Canada, commission is paid from the seller's side. So if you're working with a real estate agent as a buyer, you in all likelihood will not have to pay them anything. So think of it as help that's included in your purchase price. You will have to pay legal fees. There is also TARIO, a land transfer tax, and specifically in Toronto, a municipal land transfer tax. There are government programs in place to incentivize purchases and give you tax breaks, especially if you're a first-time home buyer, which your lawyer will be able to help you out with. But after all that is said and done, take your keys, move in, and enjoy this new house and make it your home. So all that being said, buying a house in Canada can be a complex at times and sometimes intimidating process. However, if you follow these steps and work with real estate professionals that you know, like, trust, then you are well on your way to having a successful real estate transaction. And if you need help finding these people, reach out to me through my website. I'm happy to connect you with them, no matter what market area you're in Canada. Thank you so much for watching. We've been getting some excellent feedback on the channel, and we appreciate you stopping by. Once again, if you like this video, hit that like button. And if you want to know more about Canadian real estate and how to make your next transaction as smooth as possible, make sure you hit that subscribe button. We put out new content every week, and we'd love for you to stick around. Thank you so much, and we'll see you in the next one.